Thanks for tuning in to the Replatform podcast sponsored by Ampliance and Clavio. You're listening to myself, James Gerd, and my wonderful co-host, Paul Rogers. How are you, mate?
Yeah, good. Thank you. Recovering from last night's Christmas party. Just about. How are you doing?
It's good. We're like the two broken e-commerce podcasters. There's me sat with a duvet wrapped around my waist because I've got man flu, and there's you broken yourself at a Christmas party. Luckily, our guest today is much healthier than us, so that's all good. So, let me set up the episode and I'll introduce you to Heather. So our topic today is such an important one for e-commerce. It's navigating the complexities of tax and duty handling for international e-commerce. And I think me and Paul work with loads of projects, different businesses. And whenever tax and duty is mentioned, you normally get size because it's a complex area. People working in finance know it's not just as simple as turning something on. Compliance can create headaches, and also not everyone understands the impact of compliance requirements. So today we're talking to the experts at Avalara to share their insights and practical advice about the realities of handling tax and duties for international e-commerce. So really, really important. We're going to cover tax policy developments and their impact, what merchant problems Avalara is solving and how, integration paths to leading platforms, and where the roadmap is heading. And so welcome today, Heather Wight, who's the Tax Technology Solutions Manager. How are you, Heather?
I'm good, thank you, James. Yeah, I'm not bad. I do feel sorry for Paul, though, that he has to sit through an hour of listening to me talk about tax while he's feeling a bit fragile.
He does
we'll try and make it fun.
He does it too. So you've got an interesting background and really, really relevant to your role now at Avalara. You spent 14 years at DHL building up like a formidable knowledge of cross-border trade, supporting a wide range of businesses. And I believe you moved to Avalara this year as a tax specialist.
Absolutely. Yeah. So my background very much in e-com, looking at how we could support international e-commerce businesses grow their international sales through, delivery proposition, post-purchase experience, duties and taxes. And then, moved over to Avalara earlier this year to kind of, levy on that. And then also, more importantly, support with customers with being compliant when they are trading internationally.
Lovely. I'll ask the first question then. So Avalara published an annual tax changes report. Can you summarise the key international and domestic changes in 22 and also just talk through how they impact e-commerce businesses?
Yeah, no, of course. So I guess domestically in the UK, we've seen MTD, so making tax digital, which has seen ultimately the need for businesses to implement an element of software to digitally submit their VAT returns. And then in terms of the international, there's always some sort of legislative change around the world coming, and it can be really difficult for e-commerce businesses to keep up. Most notably in the last few years, we've seen the EU VAT reforms in July 21. And then the ongoing adoption of thresholds, which trigger tax liabilities around the world. So, often there's a lot of changes recently with countries adopting those or changing those. And also with the US states, having their kind of thresholds, which trigger tax liability also. There are some pending legislation changes. So the European Commission are reviewing the VAT legislation at the moment. And I think some of that will be announced in the next few days around kind of, some of the schemes around iOS and, which is ultimately a VAT simplification scheme, which I can go on to. But there's some changes coming with that, we've probably missed by a few days.
Great. And my next question. So, like some of the clients that I've worked with recently, they've just started doing more cross-border. They're starting to kind of look at international as things get a bit tougher in the UK. What are the things that tend to catch businesses out from a cross-border tax perspective?
So I guess it's not being aware of some of the legislation. So I'm speaking to a lot of e-commerce businesses at the moment, and we kind of get onto the subject of the US, and they say, it works well. We have a good customer base there. They don't get charged duty for anything under $800. Like, it's a great market. And when we ask sort of how they handle sales tax, there's a few blank faces. So 2018, 2019, there was some legislation around kind of thresholds which were implemented. So there was a ruling between South Dakota and Wayfair, which implemented something called economic nexus, which essentially is a threshold that's implemented at kind of a state level. And once a business hits that threshold, some it's a revenue number, some it's transactions, some it's kind of either or, then they're then liable to pay sales tax. So if customers are aware of it, it's fine, because ultimately, they start calculating at that point. They register, obviously, start calculating, collecting and remitting. But the thing that catches people out if they maybe aren't aware of it, and 2-3 years down the line are now realizing that they breached that threshold in 2020. That historic liability has to be paid, and they haven't collected it from their customers. So it has a bit of an impact on the bottom line to get compliant.
And you just earlier you indicated about legislative changes coming through. I almost couldn't say that word then. It could affect taxes and duties, and I know it can affect shoppers as well. But let's focus on the e-commerce merchants for a minute. And you referenced iOS.
Yeah.
I know some businesses are aware and others aren't and don't know what to do about it. Can you just summarise to people what is iOS and what do merchants need to do?
Yeah, of course. So iOS is a VAT simplification scheme. So it was launched, when we had the lovely Brexit. And ultimately, it's to support retailers in managing their European VAT. But it's for e-commerce customers. They essentially register for iOS in one country, and what it allows them to do is collect VAT based on the country specific VAT percentage, so the different rates in different markets, but then ultimately file and remit in the one country, and then that one country then passes on that VAT to the other markets. One of the big benefits of it is that if you have an iOS number, you can pass that on to your logistics partner, and it means for orders under €150, the end customer doesn't receive any duty and VAT. They pay the VAT at point of sale, and therefore have a much better experience. And then from a compliance point of view, you just manage that one return for your European market.
Yeah, and the customer experience is something that most of the businesses I work with, especially in the luxury space, they're really concerned about. It's very simple to say, customer, you're liable at point of collection.
Yeah.
Actually, that can impact returns, and it can really, really annoy customers if it's unexpected.
Yeah, absolutely. Especially when you've got a delivery driver at your door, who's kind of saying, here's your item, but you can't actually have it until you've settled this bill that you weren't expecting. And the admin charges and stuff are often added on at that point as well. So yeah, it is difficult for customers to manage, I think, especially post Brexit, because EU consumers weren't used to that experience, so they were continuing to buy from the UK and then being hit with those bills. But yeah, I think iOS helps massively with that. And then for kind of luxury customers, as you mentioned, over the €150, kind of calculating that duty and tax at checkout is a bit of a game changer, because it just gives customers that transparency. They know what they're paying, and they have a much better experience.
Yeah, and I know that the Avalara covers sales taxes plus duties. And in my experience, a lot of merchants are reticent about trying to charge for duties at point of sale, and are much happier with sales tax, and then that's something nebulous that gets handled further down the line in the delivery chain. What have you seen work for merchants? Have you seen real evidence that the time and effort to get that set up and to charge that relevant to the country of shipping and the products that are being shipped actually has a positive benefit? Because there is a cost and effort associated with this.
Yeah, definitely. I think the key to understanding if that's going to be beneficial to your business is trying to understand the cost of not doing it. So, when you look at duty as an example, if you do have that post-purchase experience, which is fairly negative, are you losing customers as a result of that? But also, if a customer refuses to pay those duties at the border, you have to pay for that cost to that item to come back to you, and international shipping, it's not cheap. So if you're having a couple of those a month or a year, it adds up quite significantly. And then also you've got the potential customers that you're potentially losing by not offering a delivery duties paid model. So, you know, a lot of international customers that have been stung once. I know, you know, when I buy anything from anywhere worldwide now, I look for a retailer that offers it included, because, you know, once you've been stung once, you then avoid that kind of experience happening again.
Yeah, I got stung a while back. I was ordering some like health stuff from a company in the US to help with like training, and I hadn't thought about it. The pricing was good. I was like, brilliant. It turned up, and the taxes and duties were more than the cost of the item. So my own I should have thought it through, but you're right. And I get a question related to that before Paul goes on to the next one. Is obviously you've worked at DHL for a long time, and you work with a lot of different businesses to help them solve some of these logistical problems. Did you see evidence of businesses having a significant percentage of refused deliveries where the customers just said, "Sod it, take it back, I'm not paying it"?
Yeah, absolutely. Yeah, it was a very, very common occurrence. You know, I'd work with customers who, you know, we'd set up kind of an export agreement, and then they'd get kind of charges on their import invoice, and, you know, would always be kind of confused as to, you know, what those charges were. And when we drilled into it, it was because, you know, there was so many of those items being returned that actually those costs were kind of really racking up. And, you know, once the customers refused, you know, that kind of parcel, almost that order, they're probably not going to purchase again. And I think when you look at like the cost of acquiring customers now with you know, marketing and social media, you know, the costs are far beyond just that shipping cost. So yeah, it was a big impact.
Great. So I'll ask my next question, and this is quite an interesting one. I think a lot of people struggle with this. So we've had a fair few clients that kind of get to a point where they hit a threshold with particularly New York and California state tax in the US, and I think loads of our clients haven't really understood what they should be paying and when they start paying, etc. What should an e-com team need, or what does an e-com team need to understand here? Like, at what point do they need to start paying tax? Like, what are the kind of from a high level, like, how does this work?
So I mean, firstly, they need to understand those thresholds. So there's 45 of the US states have thresholds. You know, the higher ones, as you mentioned, sort of New York and California, are about $500,000 a year, which is great. But actually, there's about 20 states which have thresholds of $100,000 in a year, and also 200 transactions. And some of those are either or. So the 200 transactions can really catch people out quite quickly, especially, I guess, timing wise in, you know, periods like Black Friday and peak. You know, when you have an uptick in volume, those periods can kind of push you over those thresholds and then trigger that liability. In terms of kind of calculating sales tax, there's so many variables. I mean, if I ever met someone that could calculate sales tax themselves accurately, then, you know, I take my hat off to them. But, you know, within the US, there's 12,000 different taxing jurisdictions. So, you know, 12,000 different taxing rates ultimately. Not all products are, you know, taxable. Some are exempt. They have often rate changes. There's about 20% of rates change on a kind of monthly basis. And then they have special and seasonal taxes that apply to, you know, certain counties, certain states. So yeah, I think for an e-commerce customer, you know, what they need to understand is that there are thresholds, and that there's technology out there that can help you calculate the sales tax if you need to.
That makes sense. And I guess, what are the risks, like, again, knowing clients and having worked with clients that do get this wrong, what are the risks, and how often do people get caught out? Like, what happens if you do get this wrong?
Yeah, I mean, the risks of getting it wrong are kind of like commercially big fines, you know, and higher percentages of interest on the liability that you owe. And they don't mess around when it comes to collecting that liability as well. So, you know, if a business kind of, you know, goes, you know, they'll always try and attempt to collect that revenue from the business initially. But if the business can't kind of, you know, can't generate that fine, or those the backdated liability, then they have something called the Responsible Persons Act in the US, where they will, you know, personally make someone personally liable for, you know, that liability. So yeah, they the risks of getting it wrong are quite significant.
Wow, that's really interesting. Next question. So slightly different question. So how has the mandate for electronic filing impacted businesses, and which countries is this relevant to?
So e-invoicing and some of the sort of live reporting mandates, they're more relevant for B2B. So markets like Italy, France and Germany, if you're selling B2B, you need to be aware of those. It's not yet relevant for B2C e-commerce customers, but if you're multi-channel and you have to consider both, then you'll obviously need to be aware of them. And yeah, Italy, France and Germany are ones where they're very relevant at the moment.
What is Amplience? In a word, it's freedom. The freedom to build a digital experience as limitless as your vision. Create, preview, schedule and manage all your content in one easy place. Find out more at amplience.com. Amplience. Experience freedom.
And we're gonna throw the elephant in the room. I know everyone loves this word, but Brexit, everyone's sick of it, but it has added complexity for people selling between UK and EU specifically. From your perspectives as like a technology specialist in the area, what impact have you seen it have in terms of like e-commerce merchants, like obligations and liabilities? Like what has it added to them?
Yeah, so Brexit's, I think everyone is sick of it, but it was a really interesting time for me, actually, because I went off on maternity leave in the August and I came back and we were no longer in the EU. So I kind of reached out to a lot of the customers that I was working with and was like, what are we doing about, Europe? And loads of businesses had switched it off. Lots of businesses upped out of the UK and moved to like European warehouses. And the ones that had done that were then kind of really feeling the pain of, having split stock in the different warehouses, different sizing, especially in kind of fashion, and the costs of having that extra warehousing. So I think it was a really tough time initially and it hit retailers hard. I think now things have really settled. So, 2 years on almost, the iOS, simplification scheme has been a game changer because it does allow customers within Europe, with the OSS and within obviously the UK with the iOSS, it allows them to trade with Europe in almost like a pre-Brexit like fashion for orders under that 150 euros. I think there was a bit of a delay in the adoption of iOSS. There was a bit of a lack of understanding of, kind of what was needed, the perceived cost, complexity and stuff. And I think now people are realizing it's actually a lot easier than they thought. It's kind of seems to be something that, a lot of customers are switching back on.
Yeah, I definitely saw, especially in the smaller business space, a lot of people just turn around and go, we're not doing it because we don't understand the paperwork challenges and we don't understand the operational implications to our systems. And it's easier if it's not dominating your sales to turn it off and let it settle. And you mentioned about that threshold, 150 euros. What have you seen more premium retailers who've got really large order values, like, £2,000, £3,000 or €3,000? What have you seen in that space?
So iOSS is obviously, customers that are in the UK shipping into Europe. For luxury, and that has the 150 euro threshold. For luxury customers, there's two options. One, if they are shipping from within Europe, they can use the Union OSS, so it's just one-stop shop, and that doesn't have a threshold, so they can benefit from the same VAT simplification and the same kind of simplificated filing, and trade with Europe from Europe without that threshold. If you are shipping from the UK, you can use iOSS for your under 150 euros and then over, just be transparent. So offer kind of the delivery duties paid model, and offer that calculation at checkout.
Excellent. Thanks for the clarification. So we've talked a lot about, the challenges, what merchants need to be aware of, which is hugely important. So thank you. Let's move on to Avalara, the platform, and what problems you're solving. So can you summarize to people who haven't used it? They might know you, but they might not have used it in their business. What problems does Avalara's integration solve? So what processes and actions are you helping to automate that an e-com business might otherwise have to have dedicated resource or manual processes for?
Yeah. So ultimately, Avalara support with all elements of transactional taxes. So for the US, we actually automate the kind of full end-to-end process. So, we can kind of track and identify those thresholds. We can get the customer registered in the individual states. We can support with the calculation, even with all the kind of variable changes. And then we can also automate the returns filing. So once you've kind of collected that, that sales tax from the end customer, we can settle that with the state on your behalf as well. So you can kind of, once you've plugged us in, you can kind of rest easy that you don't really have to do a huge amount of work for your US compliance. Outside of the US and Canada, we can support with the calculation via Avatax, and then we can also support with registration and compliance in about 60 something countries. So yeah, we kind of take the pain out of the compliance side of things with the technology that we have. And then we can also support with exemption certificates as well. So whether it be kind of US customers that are selling to like resellers, or whether you're selling to government bodies and they're providing a sales tax exemption certificate, we can manage the compliance of that, making sure that they're valid, making sure that they're in date. And then also outside of that, we can support with a lot of tax research and tax content as well.
Touching on the exemptions piece, how does Avalara handle the kind of variables around varying tax rates and exemptions? So, for example, I don't know if it's children's products or variables around the customer. Like, how does that side of things work from a management perspective?
So with exemptions, I guess there's two elements if I kind of break it down into two different parts. So in terms of exempt products, for example, so ultimately Avatax is a tax engine, so it will apply the accurate determination based on some of the transactional data. What we will do as part of kind of onboarding with Avalara is we identify a customer's products and services, and we map them against an Avalara tax code. And what that tax code allows us to do is determine whether a product is taxable or tax exempt, or benefits from one of those preferential rates in a particular country. And then it also gives us the ability to track any changes within that. So if there's any kind of seasonal promotions, so back to school campaigns in the US, which kind of give tax holidays almost on certain commodities, that code allows us within that engine to kind of give you an accurate tax determination. For exempt customers, so within the US, customers that supply an exemption certificate, we can validate that and use that to calculate again accurate rates of tax or tax exempt sales, for example. And then outside of the US, again, we've got the ability to recognize a VAT number. So if you are a kind of multi-channel customer, you have B2C and B2B coming in from the same channel, we can identify where there's a VAT number and therefore not add VAT onto that invoice for those customers.
Right, that makes sense. And then the next question is around integration. So I've used Avalara quite a bit on Magento and Shopify. Which other platforms do you currently have integrations with, and which ones are you looking to work with in the future?
So we've got about 1,200 integrations. So I think there are about 30 new ones this year that ultimately allow that kind of direct plug-in into Avatax. I mean, ones that I've been speaking about a lot this week are Chargebee and Ecommerce. They seem to be the kind of popular ones with my customers the last few weeks. But we also do a lot of development within our integrations as well. So if I take BigCommerce as an example, we originally started that kind of integration to determine sales tax. But then, based on customer demand, we had lots of customers that actually were using BigCommerce and needed the duty calculation element. So again, we then, we've kind of launched that capability within the platforms as well. So there's always new ones appearing, but we're also doing quite a lot with, expanding the scope of the current connectors that we've got as well. And I think having that, wide range of integrations really helps as customers grow. They may just be Magento customer today, but next year they may have an ERP that they want to plug in for B2B. They may be selling on Amazon, and ultimately having that kind of breadth of integrations gives them the ability to integrate, but also manage everything from the one Avatax account.
I'd like to just probe a bit more on because I've worked with quite a few BigCommerce customers, and one of the things that people have liked is the fact that Avalara is included within the BigCommerce solution, and there is a pre-existing connector. But what all people are always cynical about in e-commerce world, and quite rightly, is it's just one click, it's all turned on, it's all done. So could you just talk people through what effort is required from the merchant? So if they sign up, they're on BigCommerce as the example, and they want to work with Avalara, what do you expect from them? What resources they need to provide to you to make it work and to get the development done correctly?
Yeah, so it really depends on the connector. So, some of the straightforward ones are very much sort of plug and play from a tech point of view, while some of the other kind of bigger ERPs take time to kind of, still connect the systems. But ultimately, all the coding and tech work is done really when you're looking at a connector. The time and effort from a kind of project point of view is mainly on the configuration for Avatax. So, to calculate tax accurately, we need to know, who you are, what you're selling, where you've, breached thresholds, where you're registered, how often you're required to do that filing. So yeah, most of the time of a project is more in that configuration side of things, in us understanding that.
And I'm assuming that one of the most important people that you insist involved is the financial lead, because it has such a key dependency around the whole reporting and reconciliation piece. So when you're engaging with clients, is there an initial engagement piece where you map out some of the people that you need around the table to make it work?
Yeah, absolutely. I think in that initial conversation, they are very often with finance. So it's kind of just understanding, current requirements, what stage the business is at in terms of that project. And then as things evolved, we normally engage someone from IT, from a project and a tech perspective. But then also, if we are talking about proposition changes like the duty piece, then, we may then engage the e-commerce manager, because, that's going to have a benefit on their customer experience, on their conversion rates and stuff. So, every project tends to be quite different, but the more stakeholders you've got involved, the better, because they can kind of scope out the requirements that are going to be needed from their teams ultimately at that stage.
And in terms of the next question, inevitably people will have who are thinking, oh, this sounds interesting, is how does the cost model work? What's the commercial model? How does Avalara charge? How does that scale if they suddenly, double, treble their revenue or add new storefronts? Could you talk people through that? I know it's going to be, it depends, but at a high level, how does the commercial model work?
Yeah, no, absolutely. You're quite right. It does depend massively on, the scope of the project, but ultimately, we're a SaaS company. So, most of the cost will be on the associated license. So we'll have a license for the Avatax portal, which is generally based on the number of transactions that they intend to do. They can upgrade at any point during their kind of relationship with us for transactions, as they scale and grow. And then the other costs associated will be, the connector costs, depending on, again, how complex those connectors are. And then some of the support and professional services costs. So, we can handle the implementation for the customer. We can kind of do a lot of that legwork, and we can manage the project with professional services. Again, depending on the scope, the cost would vary significantly. And then obviously, from a compliance point of view as well, handling those registrations, so those upfront registrations, we charge a per state cost for those. And then from a returns point of view, we charge a sort of per filings fee for returns, which varies depending on how many returns you need ultimately.
Great. And then last question for me. So over the years, I've read loads of your kind of documentation when trying to figure stuff out around tax and configuring Avalara. What resources do you have other than the annual report for customers trying to get their heads around all of the stuff we talked about in this episode?
So our website is fantastic. I often flick to our website if I can't remember what a threshold is in a certain market, or whether they include exempt sales or whatever it may be in that threshold. So yeah, definitely our website. We've also got lots of white papers on there and case studies. But ultimately, reach out. We're not kind of traditional tax advisors in any way, but we can kind of schedule a half-hour initial call in just to really understand your business and help you navigate through any potential tax obligations that you might have, and kind of provide solutions to support. So we would absolutely support with navigating some of that information for customers as well.
Cool. So if someone listening thinks, I want to speak to Heather and ask her a few questions about a specific scenario, or find out a bit more about what the pricing would look like for my own specific business model, what's the right contact process?
Yeah, absolutely. Drop me an email, contact me on LinkedIn. More than happy to have that initial conversation. I do specialize more so in the US and Canada market, but if it's a question that I can't answer, then I'll pass you on to one of my lovely colleagues who will be able to cover that for them.
Cool. We will add a link into the landing page for this blog post, so if people want to reach out, they can. Heather, look, thanks. That was really interesting. I mean, it's very hard, I think, to distill concise information about such a complex area for e-commerce, but it's so critical. And I think a lot of people struggle sometimes to understand what they should be doing, and often gets kicked further down the line in a project when it should be tackled head on up front. So thanks so much for coming on today.
No problem. And yeah, as I know that a lot of the answers today have been very broad, I guess. But yeah, if you've got any customers that have any specifics, then as you quite rightly said, reach out and we'll be happy to help.
Cool. Thanks everyone for listening. We hope you've enjoyed that and found that productive as well. Keep your ears open for the next episode. We drop one every Tuesday or Wednesday. Do let us know of any specific topics you want us to feature and why. If you haven't subscribed already, just sign up on the website. You get an email alert every week when the new episode comes out. And please do give us a rating on Apple, Spotify or YouTube, and also now on Amazon Music. How exciting. Until next week, everybody. For more information on this topic, head over to replatform.fm for our audio podcasts. To discuss a project, or if you'd like to chat about any of the topics covered in this episode in more detail, please reach out to myself, James Gurd, or my co-host Paul Rogers via LinkedIn and Twitter. Thanks again for listening, and keep your ears peeled for the next episode.